This is Fintech Insider News. This week, digital bank Tyme raises $250 million to reach unicorn status. Ordo tells us how open banking is going to make bill paying a better experience for everyone. And US personal finance app Current has completed a new fundraise, and they're here to tell us about it. We'll be discussing all of this and more on today's show.
If you're in financial services and you're noticing that it's getting harder to acquire and retain customers, you need to know about Finimize. Finimize creates the world's most engaging finance content for retail investors, and you can now white label it for your platform. Get access to a library of over 20,000 news, analysis, and education pieces written by former Wall Street analysts with the retail investor in mind. Not only does the access via API or manual download mean simple, fast integration to your platform, but features like advanced tagging let you easily personalize it to your customers' portfolios and preferences. With content available in over 29 languages, it's never been easier to supercharge your brand with content that resonates globally. Find out how Finimize can grow your brand or elevate your content at finimize.com/business.
Hello and welcome to episode 925 of Fintech Insider, our final podcast of 2024. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. I'm joined this week on Fintech Insider News by three great guests who are here to break down the biggest stories of the past week in fintech and financial services with me. First of all, we have a Fintech Insider debut and a big welcome to Trevor Marshall, Chief Technology Officer and co-founder of Current. It's great to have you on the pod, Trevor. You've got some exciting news, which we're going to get into a little bit later on. But would you tell our listeners a little bit about you and a little bit about Current, please?
Absolutely. Thanks so much for having me. Current is a fintech based here in New York. Calling in, I know you've got some people across the pond and listeners around the world. Current builds banking services for millions of Americans. And we've recently launched a couple of big products that we're excited to announce some fundraising behind. But we have a credit building product in addition to our banking services called the Build Card. And we also have earned wage access products called Paycheck Advance. This past week, we announced some fundraising where we have warehouses in place to support those products, some additional marketing dollars that we're able to go out and deploy, and a little bit of equity as well. I'm excited to be here and talk more about Current today.
Fantastic. Next, we have a warm welcome back for Fliss Berridge, UK Managing Director of Ordo. It's great to have you back, Fliss. You've also got some exciting news that we'll get to a little bit later. But would you mind reminding our listeners a little bit about you and a little bit about Ordo?
Yep, sure. Thanks for having me back again. It's great to be here. Ordo is an open banking payments and data platform. So we have a range of open banking payments that are live and ready for businesses to use, from in-person QR codes and billing and invoicing payments. And what we've been doing most lately is enhancing our data and solutions offerings. So we've got account verification, account information services, and refunds capability, and moving into enhancing our personal finance management capabilities.
Welcome back. And we also have another welcome back to the pod for Emily Nicolle, crypto and fintech reporter at Bloomberg, which is a job that I can't imagine ever gets boring. It's always great to have you on the show, Emily. How are things?
Yeah, it's very busy, as you said, but very good.
Fantastic. Well, I'm a little bit envious of what you get to do all day, every day. So we have a panel, and let's move on to the news. So our top story this week is, as Trevor just mentioned, Current has raised $200 million to fast-track profitability. So the American personal finance app has raised the money to accelerate its path to profitability, targeting 2025 after a 90% revenue surge this year. Founded by Stuart Sopp and Trevor Marshall, Current started with a debit card for families and expanded to banking services for Americans living paycheck to paycheck. Current offers savings pods, secured charge cards, and earned wage access to help millions struggling with liquidity and credit. So we're joined by Current's CTO and co-founder Trevor on the pod today. Trevor, congratulations to you and your team on the raise. I suppose the question on most of our listeners' lips will be, well, what are you going to do with all the money?
And thanks again for having me. The fundraise we did was split into a couple of different pieces. One of the biggest components of that was actually being able to power the products that you mentioned, which includes our secured charge card and our earned wage access product. And so this really is going to allow us to expand these products, expand the product offerings, and keep up with the rapid growth that we've had over the last year. We've also, from a general catalyst, added in financing for our sales and marketing, which allows us to go out and continue this growth, being underwritten by one of the best in the business when it comes to analyzing the growth of companies like us.
One of the things that sort of stood out is that 90% revenue jump that you've achieved over the past year, if I've understood correctly. You must have been quite pleased by that. What's enabled you to achieve that kind of growth over the past year?
The main thing is that we've really completed the product market fit. This is the mission that Stuart and I have been on since the beginning. This company is almost 10 years old, and we've been working incrementally towards a full banking and liquidity solution where you get access to liquidity if you put your trust in us by becoming your primary bank. And so this vision of really rewarding behavior using cash flow underwriting has finally fully been achieved. And with this financing, we've been able to expand the liquidity offerings, the number of people we can give it to, the amount of liquidity we can provide. And this has been, the big component of that 90% increase. It took a lot longer for us to get to this state because we took a different path to get to this product. Early on, Stuart and I recognized that in order to provide true differentiation in consumer finance, we were going to have to build the core technology that powers the critical areas of our products. And so from 2015, when we started down the path of building out our own banking core. It took some years to get that to sort of parity to even offer our initial banking product, which we launched to individual users in 2019. And from there, with the full core in place, we've been able to accelerate our velocity and release products at a much faster clip, which is something we're hoping to continue into 2025 and beyond.
That's really, really interesting. One of the things that strikes me, partly from research we've done at 11FS for various different clients, is just how tough the financial situation facing many Americans and indeed many people in other countries all around the world is. One of the things I'm interested in, Trevor, is how big a part of what you're doing is the earned wage access? Because when people first hear about earned wage access, it sounds a bit like buy now, pay later. It sounds a bit like a credit product, but it isn't really, because this is money that people have already earned but not yet been given by their employer. How important is that to Current's proposition, and how much does that sort of resonate with Current's customers?
Yeah, absolutely. It's a critical part of our offering. If you take a step back and look at the macro backdrop, there's been real inflation, especially for folks who are closer to the paycheck to paycheck sort of model of navigating their finances. And that inflation has put a tremendous amount of pressure on daily needs of customers. And an example that I always give is if you're one day late on a $50 utility bill, that's going to be a $20 late fee in many cases. And so the sort of liquidity that's available for customers that are sub 660 FICO is very, very limited. And so what we've been able to do is provide that liquidity through this earned wage access product and give them some relief in between those paychecks. And that it's a virtuous cycle, because as people continue to do their banking with us, we're able to learn more about them and underwrite them in a way that most credit card companies are not able to do in the US. And so we're opening up a whole new product area with these types of earned wage access products. And that's given us a huge advantage and accelerated a lot of our growth.
And presumably that also helps them improve their credit ratings over time.
Yeah, that's the build card product. And we actually approach that from the angle of, if you are outside of the credit system today, which effectively is below 660 in the US, it's very difficult to get reasonably priced credit. We want to focus on building that credit up through using the spending habits that already exist for our customers. And so that is the secured charge card we have in place. It's a unique product offering. We built it in a way that really limits the risk around going into debt and having negative reporting, while still, having true credit and a secured charge card, which is a well understood model from the bureau's perspective. And the result of that is within 6 months, our customers are seeing an average of 91 points improvement, which is a leap above a lot of the other offerings in the US. And the reason for that, even in the secured charge card space, is because we've been able to integrate that into their daily spending habits with an extremely high attach to that product. I can talk a little bit more about those mechanics, but when you pair that credit building with the liquidity they're able to get access to, you have now the ability to get the relief that you need as an everyday American working hard, while still being on that journey to better and better financial outcomes.
That's fantastic. Fliss, I'd love to bring you in on this. So what did you think of this story? What do you think of what Trevor's just been talking us through?
Yeah, I think it's fantastic. I think there's a bit of a theme running through this episode, and it's nice to see and hear about fintechs that are creating solutions that enable people that most need creative solutions with their finances. And we've found that people often feel nervous about two subjects that they have to deal with in life. One's technology and one's finance. So those of us that have chosen to go into finance and technology, fintechs, have got our work cut out for us. But helping people manage their finances and then feel better about those finances can only be a good thing, and it's sorely needed.
Thank you. Trevor, one of the other things that I thought was interesting is that I understand you let customers buy and sell crypto within the app. Now, obviously, crypto's had a bit of a roller coaster over the past, forever. But it's not necessarily something that people associate with sort of financial stability. Tell us a little bit about the role of crypto within Current.
The thing that we look at in part of our mission is to provide financial access. We are not in the business of telling people what they should do or shouldn't do with their money, but the reality is that for a lot of financial products, our customers just don't have the ability to interact with them in a reasonable way. One of the challenges we saw with the existing crypto solutions when we launched this now almost 3 years ago was that when you buy and sell on these external platforms, you're often stuck, if you need liquidity, waiting 3 to 5 days for those payments to clear. Otherwise, you're paying a fee to get money. If you buy Bitcoin on Coinbase, for example, and you sell it, you're either going to have to pay an instant fee to get it over to your bank account if you need it, or you're going to have to wait 3 to 5 days on ACH to get that money cleared. And so for us, we saw an opportunity to have that integrated within your sort of banking account and within your spending experience. And there was customer demand. Customers were asking us, hey, we want access to these things. They were citing a lot of the convenience and utility that they had using platforms like Cash App. So we made it available because that's what customers were asking for. So for us, it's really about providing financial access and providing the products that our customers want.
Emily, you obviously know a lot about this, given this crypto is part of your beat at Bloomberg. What do you think? Are we seeing a sort of resurgence in enthusiasm for crypto, particularly in the States following the election result?
There's definitely been a resurgence of enthusiasm across the whole year. I mean, it even started last year when we would have still said that crypto prices were pretty low, but Bitcoin itself had risen quite considerably in 2023. And now in 2024, we have record highs almost every other day. So we're definitely kind of in the swing of the resurgence of demand. I thought it was actually quite interesting what Trevor was saying about, we're not the ones who get to decide what it is that our customers buy. If it's what they want, then we should make it available. Because in the UK neobanking scene anyway, we've not seen that approach. We have Revolut being one of the bigger banks that has been offering crypto trading for quite some time. But others like Monzo and Starling Bank have continued to not offer crypto, saying it's not something that they think is going to be part of their roadmap, at least anytime soon. And it's interesting how different neobanks approach that conundrum, given that crypto is not something that is particularly regulated in any market at the minute. And the protections that banks and personal finance apps can offer are very minimal.
Thank you. So, Trevor, one of your goals, I believe, as a management team is to get to profitability next year. And we're not far from the new year. Do you think that's a target you're on track for? How confident are you feeling that you can hit that sort of profitability goal by the end of the year?
Yeah, on the back of this fundraising, we know we can do it. At this point, the nature of the way that acquisition works for neobanks is that you have a very slow but expectable, like you can count on it, conversion curve. If I bring a user in today, I know that within 12 months, there's going to be a large percentage of that cohort that converts into primacy. We track those conversion curves really well. And even from the acquisition we've done this year, the conversion that we're going to get from our existing cohorts is going to lift us the majority of the way there if we weren't to do anything else. But with this financing, we can continue the acquisition of new customers, the acceleration of product development to further expand ARPU. So 2025 is pretty locked in for us.
Fantastic. Well, congratulations to you and all your team, and best of luck. Really, really exciting. And it's always great to hear from fintechs that are really trying to improve the lives of people all around the world. So fantastic. Okay, let's move on to our next story, which is that open banking is the key to facilitating better payments. Eviden, Ordo, and ByzGen launch a new offering. So Eviden, which is part of the Atos Group, fintech innovator Ordo, and blockchain company ByzGen are launching an open banking solution that facilitates real-time flexible payments in the hope of redefining how businesses and customers manage payments. Using variable recurring payments, or VRPs, which are expected to reach full-scale implementation in the UK in 2025, the system allows direct transfers from customer bank accounts to businesses. With AI-powered insights and flexible payment options, the partnership seeks to transform how customers handle bills, reducing financial strain and promoting trust in digital transactions going forward. So Fliss, thank you so much for joining us. It obviously makes sense to come to you first on this. So many congratulations on the launch. Can you tell our listeners a little bit about exactly what this is and how it works? Because open banking isn't new. So what's new in what your offering is?
Yeah, thanks. We're really excited to be able to offer this comprehensive solution up to the industry as well. So I'll explain what the solution does and who contributes what in the order of how it comes together. So using Ordo's account information open banking service with customers' and consumers' consent, we can connect to their bank accounts and collect information securely. And we pass that information about what their income is and what their outgoings are. And we pass that information to our partner, Eviden, who can then begin to, with AI and machine learning, categorize that information and make something useful of that raw data. And they can look at what are people's essential spending, what might be discretionary spending, what may need to be prioritized, what dates things need to go out, what date it might be more beneficial for bills to be paid, and even some kind of building up of payment of bills so that those bills are paid incrementally in installments. And then the ByzGen element is to then record all of the decisions and that information. They're the steward of that information and the decisions, so that all of this can be immutably recorded and revisited should there be any challenge or should something need to be shown to regulators from a positive perspective to show how this is helping. And once you package all of that together, you've got real-time, accurate account information, and then machine learning and intelligent smart decisioning, along with the immutable recording of those decisions. You can then really make a solution that helps consumers, particularly who have low and or irregular incomes, manage those essential bills. And as we've already been talking, there are lots of people that are still finding paying for life and essential bills hard in today's society. So having a more intelligent and flexible and controllable means to pay those essential bills, we think is what this flexi payment solution can achieve. It's good for consumers, allowing them to manage their payments and pay their bills, and it's good for businesses. Not only does it help collect their revenue and reduce their debt book, it turns their customers that were once high risk and therefore high cost into more manageable customers. And it's a win-win for both business and consumer.
So are you proposing to sort of partly sort of automate and prioritize customers' payments for them to try and sort of help them make slightly better decisions while also giving them a little bit more flexibility? Have I sort of understood that right?
Yeah, that's exactly it. It's not taking decisions away from people, but it is looking at income and outgoing and payment history, and then giving people nudges and notifications and suggestions and suggesting to the utility business how a customer may be more able and more likely to meet what's owed more comfortably for them. So it's allowing a business to be more likely to be able to collect their payments and a consumer to be more able to meet those demands.
Trevor, I'd love to hear your thoughts on this, because what sort of Ordo is doing here is not fundamentally different to what you're trying to do insofar as trying to help people who are struggling a little bit just manage that a little bit better and just sort of stay on a good track. What do you make of this?
Yeah, I mean, it's very much in the same direction of our mission, which is to provide that tactical liquidity. And you have to get creative with how to provide that, because the existing structures that are in place through loans and sort of the more legacy credit system are often just not set up properly to handle these more micro smoothings of consumer payments. So that's definitely a direction that there should be more of. There should be more creativity, and it's a huge area that technology enables, because you can make these types of real-time decisions without going through a person who's sitting in a bank branch assessing the creditworthiness of someone who's applying for it. So yeah, this tactical liquidity theme, I think, is a huge part of where fintech can really lift consumer outcomes.
Emily, I'd love to bring you in as well. This angle of using a blockchain to sort of record the transactions and so on is not something that we often see or often come across. I mean, what do you think of that element, or indeed the proposition more widely?
It's definitely not something I've heard of in open banking before, and I think there's been a lot of room for innovation in open banking for quite some time. There's been little movement, I think, in open banking over the last few years in terms of getting things kind of innovative and beyond the initial getting all of the banks on board in the beginning, which took quite a few years to get all the high street banks involved. And so thinking of new ways to get open banking fresh and changed and offer more choice to consumers, those are all things that I think businesses will be focused on in the coming years as they try and get more of those kinds of grants and things from the government that is really supporting that effort. In terms of what blockchain can do, though, in that space and in transactions, I mean, that's what blockchain is all about, right? It's all about facilitating transactional payments for tokenizing real-world assets. It's not just about speculation and meme coins and Bitcoin as well, especially in the fintech space. And we're seeing an increasing amount of traditional fintechs, as you'd call them. They're not really traditional companies, but fintechs in that sense, embracing blockchain in different ways. Even if they don't tell you they're using it, some of them are.
Is that right, Fliss? I mean, because pulling together a collaboration between three companies is in itself an achievement, right? It's not easy to align three companies. Do you agree with that analysis? How tell us a little bit more about the sort of importance of the blockchain component of what you're doing here.
Sure. Well, on the partnership element, ByzGen were already working with Eviden, and then we came across Eviden because we were trying to solve the same problem. If I can give you an example, when we first started talking about this with Eviden and how can we help all these people that need a more agile and dynamic way of meeting their bills, we was talking about this in 2023. And at that point, around Christmas 2023, the utility debt book was 2.3 billion. Roll forward just 1 year to around this time, Christmas 2024, the debt book is now, for the utility industry, 4 billion.
Wow.
So there's a real need for a more holistic business service rather than, just as Emily was saying, some open banking plumbing. There needs a bit more value add and business servicing to be wrapped around this for open banking to not only take off, but to actually be useful for businesses. And also, just to pick up on something that Trevor mentioned about smoothing, also for open banking to be useful for consumers, that value added bit. It occurred to me earlier that for those of us that are lucky enough to have regular incomes and a monthly salary, it's this amount paid on this day, it's predictable, and we're all signed up to the trusty old direct debit that businesses love. And that's useful for where consumers can meet that demand and that deadline. And our utility bills are often smoothed for us over the year, and that helps people manage high energy costs in winter, and it matches how I and lots of us are paid. But what's needed now is almost the reverse of that smoothing, to reflect how some people live in society and some people are paid, be it whether you're on benefits or you're on an unpredictable, changeable 0 hours contract, or you might have a portfolio career or this kind of job that is contingent. You need the reverse of that smoothing. You need the payment method to fit how income is received into your account. It's the reverse of what we needed in the 1960s when direct debit was brought in. So partnerships are in enabling value-added businesses to better serve what's needed by a business customer and the consumer. And it's almost reversing what we once needed in history, because now technology has enabled us to be much more dynamic and up to the minute with pretty much everything we do in our daily lives.
And are you dependent on the banks supporting and enabling variable recurring payments for this to work? Can you do this without VRPs, or are VRPs sort of absolutely crucial and therefore the sort of recent change in approach?
We can do single payments at the moment, and we can do instalment payments, which effectively get you to the same outcome. We can do those repeated payments without the consumer having to authorise every single payment for, as you've alluded to, a particular use case, and that's within financial services. It's so-called sweeping me-to-me payments, where both the sending and the receiving account are in the same name. So for the moment, utilities falls outside of that capability. So whilst Ordo is live with VRP today, it's within credit and lending and savings and credit card repayments. And we can deploy this flexi payment solution by means of making repeated single payments that are authorised every time. And a business can also send out a payment request where they enable their customer to pay that in part. So the full amount is always and still owed, but it means a consumer can pay that in more frequent, lower instalments if that suits them. And then the final iteration of this solution, where it all comes together and can be its most frictionless, where that's wanted and needed, is for unrestricted variable recurring payments, which is the industry have been working on for a while now. And I'm planning for the central body, the Open Banking Limited, have got a plan for a multilateral agreement between all the banks and all the TPPs, the third parties involved in this.
Yep.
That can go live at the beginning of the second half of next year, when this can fully take off.
Fantastic. Well, congratulations to you, Fliss,
and
to all of your colleagues at Ordo, Eviden and ByzGen on this launch. And if those of you listening are interested in knowing more about open banking, earlier this year, we at 11FS, in association with our friends at Go Cardless, published a new report about how to take open banking payments mainstream in the UK. And you can download that for free at 11fs.com/openbankingreport. Okay, on that note, we're just going to take a quick pause here and we will be back very, very shortly.
Oi, aqui é a Natália Souza, do Para Dar Nome às Coisas, e eu tô muito feliz em participar do primeiro amigo secreto de podcasters do TikTok. Eu tirei a Marcela Ceribelli, a Má, do Bom Dia Óbvios, e o meu presente vai ser um livro que eu amo e que bombou muito no TikTok, o Tudo é Rio. A forma com que a Carla Madeira traduz o mundo interno de cada personagem, meu Deus, é arrebatadora.
O TikTok esse ano fez milhões de pessoas voltarem a ler. Um simples TikTok pode gerar um grande impacto. Descubra livros incríveis e muito mais no TikTok.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's vanta.com/insider for $1,000 off.
Right, back to the news. African digital bank Tyme has raised $250 million in a round led by Nubank at a $1.5 billion valuation. The Series D round means that the South African fintech Tyme Group has reached unicorn status. It joins Nigeria's Moneypoint as one of a few African fintechs to reach the milestone this year. The round was led by New Holdings, owner of Latin America's hugely successful digital bank Nubank, which has invested $150 million for a 10% stake. Operating across South Africa and the Philippines, Tyme Group serves 15 million customers through its hybrid digital banking model and plans to expand into Vietnam and Indonesia next year. Tyme is reportedly eyeing an IPO in New York by 2028, with plans for a secondary listing in South Africa. So, Emily, let's bring you in. What did you make of this story? Fantastic news, right?
Yeah, I mean, I thought the most interesting part was actually is what it tells us about Nubank's intentions, or New Holdings rather, because we reported at Bloomberg only, I think even a month ago now, that New was looking at re-domiciling its business to the UK. And it's a move that baffled a lot of fintech people when we reported it. But from those that I've spoken to, it sounds like the UK is a really great place for a business to serve a lot of other countries from, Africa being a really big one of those. And so seeing this news about the investment in Tyme really made sense to me in that vein. It's a great way for Nubank to have a foothold in Africa, to have a business there that they can learn from and experience things with, and then also expand their own business kind of geographically as well.
Nice when you write an article and people are a little bit skeptical and then it turns out to be true, eh?
Yeah, exactly.
Do we think that they can learn a lot from each other? I mean, do we think that essentially the fundamental human problems that people face in South Africa or Indonesia or Vietnam are similar to those in Brazil, Colombia? Fliss, maybe I'm going to throw that one at you. It's a little bit of an unfair question, but do we think there's a lot of commonality actually, and that really the services fintechs are providing in different countries are all variations on a similar theme?
I think what all of these services and companies have in common, and including with Ordo and Current that we've talked about today, is that they are serving a fundamental human need. They're far more innovative and tailored to what the human that is trying to go about their daily life needs and is trying to get to. And it is tailoring and trying to foster good habits with finance to help people manage their own financial lives more. And it's about getting people into and helping people into good payment financial habits that then are better for them and the longer term.
Emily, why do we think one digital bank would invest in another digital bank? Do you think this is a move towards an eventual acquisition? Do you think there's maybe costs they can share? Do we think Nubank is saying, hey, we probably can't move into these markets, so let's go through a partner? What do you think is sort of driving that?
Well, I mean, I'm not going to pretend to know the inner workings of Nubank and have all that kind of, juicy insight that I think everybody would want to have. But if we think about the way that Nubank grew itself into the behemoth it is today, it knew its core market extremely well. And that is one thing that has enabled Nubank to be far and above better than a lot of other digital banks. Even if we think about Revolut, Nubank's cost of acquisition per user is so much smaller and it has so many more users purely because of how well it knew its original market. And so doing these kinds of investments where it invests in Tyme, or like it invested in the Indian digital bank Jupiter a couple of years ago, these are strategies where we can maybe think that Nubank is thinking those are businesses where we think they understand their core market like we understood ours. And perhaps the better thing to do in that instance is to invest in those businesses, learn from how they see the market before we go there ourselves, whether that is through a merger, an acquisition, or even just setting up shop independently.
Trevor, it's really interesting this, the way that Nubank and Tyme Bank are potentially going to be collaborating without giving away any sort of secrets about your future plans. Do you at Current sort of partner with, talk to, work with other fintechs? Do you see relationships with other fintechs as kind of important to your growth in the future?
Yeah, I think ultimately fintechs are all generally driving towards the same mission, which is to improve financial outcomes and to parry off sort of what is existing in the market today. I think Nubank's strategy of going and building in places like Mexico and places that are more close to their known demographic that they expanded on in Brazil makes a lot of sense. And then they're investing in the places that they don't have that foothold yet. And this allows them to get in there. So the strategy makes a ton of sense. I think even for Current, there's fintechs that we partner with to provide incremental services. And so generally, strength in numbers, rising tide. There's a lot of different sort of metaphors that make sense for fintech. And yeah, we're all going after the same thing. So working together makes a lot of sense.
Nice. Emily, a last quick question for you. Is this a vote of confidence in Africa? Is this a sort of fintech investment in Africa? Is this something we should be excited about for the continent? Or on the other hand, is it actually Tyme Bank saying, well, actually, we're going to make a bit of a bet on Vietnam and Indonesia? And in the sense, it's not really an African success story because they're looking to Asian markets rather than African ones. What did you think on that?
There's definitely an element of that, because they already are in South Africa and the Philippines. And so they kind of had their eggs split between Africa and Asia, and they've said that they want to expand more on the Asia part. So you could say that this is actually more of a play on benefiting Asia than Africa. But I think it shouldn't be underestimated the change that the African fintech market has undergone in the last year. We saw Yellow Card raise a really big round recently, and even some of that has been due to crypto growth as well. And so maybe African fintech isn't where we'd all hope it would be, but it's definitely something that is growing, that is benefiting from this increase in innovation. I spoke to, not to name drop, but I spoke to Idris Elba not that long ago about a new project that he's doing with trying to get digital wallets accessible for Ghanaian creators in the space. And so it really does feel like there is still that big push towards getting African fintech up to scratch, and not just international companies coming into the space, but local companies that know the market, that know what they're doing, that hire locally, that really reinvest back into the continent. Those are the ones that could be leading the charge in the years to come.
Now I've just got more job envy. Well, congratulations to everyone at Tyme Bank and indeed Nubank. Very, very exciting. Okay, let's move on to our last big story, which is that the UK's regulator is set to limit card fees after a Visa and Mastercard price hikes. So the UK's payments systems regulator is proposing price caps on card fees after Visa and Mastercard raised cross-border interchange fees after Brexit. The fee increases, costing British businesses an extra £150 to £200 million annually, are under scrutiny, with a consultation underway to restore the pre-Brexit limits of 0.3% for credit cards and 0.2% for debit cards. When the UK left the European Union, Visa and Mastercard raised these interchange fees fivefold to 1.5% for credit cards and 1.15% for debit cards. Visa and Mastercard, which dominate 98% of the UK card payment market, argue that the changes may harm innovation and competition in the payments ecosystem. This news comes at a time when Visa and Mastercard are under increasing scrutiny across the globe. A lawsuit was filed by the US Department of Justice accusing Visa of violating antitrust laws earlier this year. Executives from both companies were also extensively grilled and berated by a Senate Judiciary Committee over high swipe fees last month. And in New Zealand earlier this month, the country's Commerce Commission issued a draft decision to reduce the fees that businesses pay to accept Visa and Mastercard payments. Fliss, I'd love to bring you in first. Really charging British businesses more, is that really, taking that away, would that really harm innovation and competition in payments? Do you think that's true?
No, I don't buy that for 1 second. As open banking is, as the UK government and regulators have frequently said and publicly, and we've recently had the National Payments Vision that shows government commitment to open banking, we have all of that commitment to provide competition to Visa and Mastercard and the banks as card issuers, because Visa and Mastercard are such a dominant force in UK and UK payments. And if you have competition, competition comes with winners and losers, of course, otherwise it's not competition. And so the entities that are set to lose some of their market share to competition are going to put up all kinds of and every kind of argument that they can think of. But I don't think before Brexit, Visa and Mastercard didn't hit the headlines for saying we're not making enough money, so therefore we can't be innovative. So I don't buy their argument at all. And when we talk to prospects about open banking, which is a far lower cost payment method and which is instant and comes with instant liquidity for businesses, we don't ever hear of the low card scheme fees that they have or the great service that they get from cards. So I don't buy that argument at all.
Emily, what do you think? Were Visa and Mastercard just taking advantage of that decision by British voters to leave the European Union? Do you think there was a justification for putting the fees back up?
I mean, there's an element of everything was on the table after Brexit, right? The UK was finally going to be in a position where there didn't need to be that exact matching with Europe. And so I don't think Visa and Mastercard were probably alone in thinking that way and trying to take advantage where they could. However, interchange is something that we, for example, saw was really important during the pandemic, because a lot of the digital banks and neobanks that relied on card payments in store, for example, as a means of revenue, they then really suffered when that wasn't available to them in the pandemic because none of us were out going to the shops. And so we can see how much of an impact something like interchange can have on fintech growth and on businesses in the UK. And so this is an area that can be quite sensitive for a lot of businesses. And I can understand why there is then this conversation about wanting to take it back down, thinking about competitiveness. I mean, Visa and Mastercard, they don't really face that much competition in the grand scheme of things except between each other. So there's definitely a bit of a valid argument there from the PSR.
Trevor, it's probably interesting for you just sort of listening to the interchange fees we're discussing, which at a European level are a lot lower than what many American businesses face. Do you think the sort of decision by the Department of Justice and the Senate Judiciary Committee to sort of scrutinize Visa and Mastercard, do you think that might lead to anything in the States? Do you think we might see American card interchange fees come down at some point in the future?
Yeah, I think there's a couple of elements to the story that are worth exploring. I think one, as I guess the American on the call, and the my own, I have like personal perspectives on the impact of price control. Like generally, a lot of price control leads to unintended consequences. We're even looking right now at some regulation in the US that's going to cap overdraft fees, which in principle is a very good thing for consumers, but in practice ends up in accounts being closed because they can't monetize customers. And so it ends up constricting access. And so even though there may be a solid argument here for price control on interchange in the UK, I do think that the right way through is actually by enabling more competition, if that's the actual means here, which is right now there is a pretty tight lock on networks globally. Maybe there are some ways to encourage competition. For example, when we had Durbin here in 2010, there was an exemption made for banks under 10 billion of assets in the US. And a lot of the existence of companies like Current, Tyme, and others are directly due to the fact that there was this exemption made for smaller banks, because it allowed fintechs to have a path in where you could build a business model that could still improve the outcomes of everyday Americans. And if you look at the percentage of people who have been banked over the last 10 years, that's increased massively because of digital upstarts like us. And that was created through an economic incentive towards effectively smaller businesses. And so I think the price control will probably have a direct benefit for certain UK businesses because they won't be spending as much to accept payments, but it doesn't get to the root of like encouraging competition. So I'm not super familiar with all of the dynamics in that market. I'm more familiar with what's going on in the US, but I generally believe that there should be mechanisms to encourage competition if the reason the price is high is because there's a lack of competition.
Fliss, do the sort of stories like this that are sort of prompted by regulatory action, do they help in the sense that they make retailers or merchants think about their costs? It sort of just causes them to sort of take a step back and just think, hang on, are there alternatives? I mean, is it helpful even if there's no regulatory action? Is the very scrutiny in itself useful because it sort of gets people thinking about it?
Yes, I think that's a good idea. And I agree with Trevor in that there is a side of it of the parties that can, also enabling competition. And in the UK at the moment, that's the FCA and the Payment Systems Regulator laying the groundwork to enable open banking to truly take off, become ubiquitous and mainstream, as the government want from the National Payments Vision. But you're right, so many businesses just see taking cards as necessary, which it is in the UK pretty much, but also the cost of it as just something they have to bear, and that's a cost of business. So this does serve to highlight to businesses that some people and some entities and regulators deem this inappropriate and too much weight on the side of some parties. And also there needs to be able to be a signalling to consumers that if you pay by different payment methods, different costs are attracted to that payment method. And if you can be funneled down a payment method that does cost less, like open banking, but is just as secure, then that means there's more money to be spent on the business by giving you better value services rather than just lining duopoly pockets.
Fantastic. Thank you. Okay, now for a quick look at one more news story this week that we don't have time to cover in full, which is that Bunk has become the first bank in the world to launch real-time speech-to-speech artificial intelligence translation. So announced at the AI-powered bank's Update 27 event in Amsterdam, this feature enables multilingual conversations between customers and support agents, breaking down language barriers. The update to Bunk's AI assistant, Finn, also introduces image recognition capabilities, enabling customers to process receipts, invoices, and documents instantly, in a move that the bank says will simplify everyday financial tasks. With the Bunk app now available in more than 30 languages, Chief Executive Ali Nicknam says this update makes the app more accessible, user-friendly, and fun for customers worldwide. I think this is really interesting because Europe has so many languages, and indeed, of course, the world has many more. And there are plenty of people who have migrated to Europe from different countries around the world who don't necessarily speak the native language. So this creates a real opportunity for efficiency if you can get the technology to work really well to enable people to speak in one language and be understood by somebody else in a different language. So congratulations to the Bunk team. I imagine we'll start seeing other firms doing similar things like this. The proof is always in the pudding, so it really does depend on whether the AI can truly recognize all the different accents, the wonderful variety of different voices and accents that people have. But fantastic if it works and enables people to do their banking in their own language more easily. Okay, and finally, we're going to end with something a little bit more lighthearted, which is our 2024 Fintech Naughty or Nice list. As this is our final episode before the end of the year, we want to do something a little bit different for this week's and finally. So who is making Santa's Fintech Naughty or Nice list? Who will be getting all their presents they asked Santa for this year, and who will be getting a lump of coal in their stocking? So to help our panel, we've decided this doesn't have to be a person. It can be a company, a product, or a feature. So here's a couple of suggestions from our community before I throw it out to the panelists. So on our nice list are the UK's nationwide building society for its £100 fairer share payment to its members, Revolut for finally getting its UK banking licence, and 013 for its work in tackling climate change and winning the 11FS Award for Fintech for Good. On our naughty list, you, our listeners, suggested everyone responsible for the Synapse debacle in the States, anyone involved in the UK's car finance commission scandals, TD Bank and its $3 billion fine for anti-money laundering failures, and every single fraudster around the world ever on the list. So who should I pick on first? Fliss, do you have someone on your Fintech Nice list this year and why?
Yeah, okay, I'm going to go with an entity and maybe a bit cheesy, but Open Banking Limited and everyone that works in that central organisation entity. They deal with lots of organisations, fintechs like Ordo, lots of banks and payment service providers who often have polar opposite interests, and they do a darn good job of being independent in the middle and trying to come up with the genuinely right solution for UK PLC and its businesses and consumers.
Fantastic. Anyone for your naughty list?
My naughty list is, I'm going to say, the regulators. We need to get on with unlocking VRP, and we've been waiting for responses and movement now for far too long. We've had consultation after consultation, and now we need some brave decision making to move forward. And let's hope that comes in 2025.
Thank you. Trevor, how about you? Anyone on your fintech nice list?
I think this might be a little controversial, but I think issuing banks in the US actually should be on the nice list, even though the press around them has been brutal, with consent orders and things like that coming out. The reality is they're just having to navigate at a much higher level. The expectations and the way that they're navigating has been, we're working with several banks, and the industry has just been very challenging with sort of the additional burdens. But they're doing a great job. Like the ones that we're working with, Choice Financial and Cross River Bank, they're navigating the environment very well, and they're taking a very customer-first approach to how to go through this period of much higher scrutiny. And the requirements that they have are just things that they've had to rise to extremely quickly. And the ones that are making it through are going to be set up for success for years to come from here. So, and then on the naughty list, I think certainly a lot of that scrutiny came from some bad actors that were sort of taking advantage in some ways of the niceness of the banks previously. You've already named a good number of them. So I think that the bad apples sort of ruins the whole bag of apples. I'm not sure what the right metaphor is, but it's not good. So.
Ruins the whole barrel. Emily, how about your nice list?
For my nice list, I was actually going to be controversial to Fliss's, and I was going to put the FCA on my nice list.
Ooh.
Because they finally answered, I think, a lot of the crypto industry's prayers and gave us a year for which we will have crypto licenses in the UK. It has been something the industry has been waiting for since 2017, 2018, I think is when they first started doing consultations on stablecoins. So it's been a long time coming, and in 2026, hopefully, everything is on time, we shall finally have it, and there will be a regime here and a lot more protections for consumers as well, which will be good. And then on the naughty list, I was going to be kind and say no one, because it's Christmas. And probably because I shouldn't pick.
All right, I'm going to do a quick nice list. I'm just going to put the other nominees we had for our 11FS Fintech for Good award, which were Tomorrow, the MIFOS Initiative, Economy, and Echo, a bunch of fantastic firms like 013 doing really, really good work to try and improve lives for people in line with the UN's Sustainable Development Goals all around the world. My naughty list is, indeed, all fraudsters, but also I'm so disappointed by the Synapse. The failure of anyone to really resolve and step in, and just leaving it to the lawyers to just keep arguing is causing real harm to consumers across the states, and that's just never good to see. Okay, well, that wraps up this week's FinTech Insider News, and indeed FinTech Insider for 2024. Thank you so much to my three guests today. Where can people find out a little bit more about you and your companies? Fliss, where can people find out a little bit more about you and Ordo?
Great, thanks. If you want to find out more about Ordo and our payment and data services, head over to ordopay.com, or I'm on LinkedIn as Fliss Berridge.
And Emily?
You can read all my stories on Bloomberg.com and on the terminal if you have a subscription. And you can also find me on X at Emily J. Nicolle.
And Trevor?
Current.com. You can download the app, get started if you live in the US.
And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out about the work the team's up to at 11FS.com. So we're taking a little bit of a break over Christmas, and so this is our final podcast of the year. Don't worry, we'll be back in the new year on Thursday the 9th of January with our annual prediction show, so tune in then to hear what we think is going to happen in financial services in 2025. So thank you all so much for listening to FinTech Insider over the past year. If you're brand new to the show, please give us a follow via your podcast platform of choice. Make sure you never miss an episode. And may I wish season's greetings and all the best to you, your friends and families for the new year. So thank you all again. Thank you to my three panelists, and goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.